If you're on this channel, you've probably seen all of the data going around about bankruptcy soaring, foreclosures soaring, mortgage payments and arrears soaring. And all that being said, is there anything at all that can save the Vancouver real estate market? If you're currently worried about our impending doom here in Vancouver, by the end of this video, you should feel a little bit better. I'm that agent Kelly. I talk about Canadian real estate and my local market of Abbotsford and the Fraser Valley. If you're into that, subscribe. Again, if you want early access to the hottest pre-sale and resale deals, you can join the Equity Club with the link in my description. Now, just to preface, in this video, I'm going to talk about specifically prices, not affordability. All right, so obviously market isn't too hot right now. The spring market, this is a slow spring market. It's slower than 2023 and it's even slower than 2022. Inventory is building and sales are weak. On top of that, we still have so many people who need to renew their mortgage, likely going from a 2 to 3% interest rate to a now 5.5% interest rate. GDP per capita is declining in pretty much every single measurable metric that we use to determine the state of the economy looks bad and getting worse every month. So what's going to save us from a complete and total meltdown? So number one, I think the Bank of Canada is finally in a position where they could lower interest rates if it were absolutely necessary. Back in 2022, 2023, that wasn't an option because inflation was 4, 5, 6, 7%. Well, today we have held steady basically under 3% for the last, 6 months or something like that. So back then it was scary because if the market had crashed or something had happened back then, well, there was no way for us to really come in and prop the market back up because inflation was so high. Today, story is not the same. Not only that, the large portion of our inflation currently is actually due to shelter costs, mortgage costs, as well as rent costs. Both of those would actually decrease. So the mortgage costs would pretty much instantaneously decrease, and then rent would decrease slowly over a certain amount of time if we were to lower interest rates. So although, the general thought process is, hey, if we lower interest rates, inflation is going to come back, which on a long-term outlook could be true, but actually in this case, in the short term, inflation would actually likely go down right away. So if the market did crash today or things did get really bad, we have about a 300 to 400 basis point buffer to play with. Where if things got really bad, we could just start cutting interest rates and cutting, and inflation would actually come down with it once we started to cut. And not that we'd want to use all 300 or 400 basis points, I'm just saying the cushion is there. Number two, we could increase mortgage amortization. So currently right now, the longest you can amortize your mortgage over is 30 years. Well, way back in the 2000s, you used to be able to get a 40-year mortgage with 0% down. Now, I'm definitely not saying that we should do that or we should bring that back. I'm just saying that being able to extend mortgage amortizations out to 40 years is again another tool that we have in our back pocket if things started to get really bad. And this would substantially drop mortgage payments without even having to drop interest rates because they'd probably do both at the same time, I imagine, if they were to ever break this tool out of the tool bag. But you're paying back a mortgage over 40 years instead of 30, therefore the payment would have to be quite a bit less. Number three, they could completely can the stress test. So right now with fixed rates at about 5.5%, if you go and get a mortgage, you have to qualify at 7.5% because it's the contract rate plus 2% is currently what people are getting stress tested at. Now, I personally deal with this almost every single day where somebody wants to buy a home and they can afford the mortgage payment for that purchase price, but they cannot get qualified for the loan to actually buy that home. If they were to completely remove the stress test, it would likely have a significant impact on buyer demand. Now, it's obviously not going to fix everything, and there's still going to be a whole bunch of things wrong with the economy, and we're still going to be trending towards an absolute disaster if they got rid of this. However, I'm just saying this is another tool that they have in their tool arsenal to at least make things a bit better. Now, number four, this is a big one, and what I think will ultimately save the housing market is housing starts are hilariously low right now. As shown in this chart here is the new housing starts in comparison to growth of the working age population. And as you can see, our working age population is currently growing at 5 people to every 1 housing unit started. Keep in mind, that's not even a house that's finished being built. That's just one that has been started. So today we currently have a lot of product that is going to be built in the next 1.5 to 2 years, because these are all condos and townhomes, more or less condos that were pre-sold a couple years ago that are now, in the process of being built that should be finished in the next 1.5 to 2 years. However, for the last 2 years, housing starts have been extremely low while population growth was extremely high. So we literally had, housing starts at near all-time lows with population growth at all-time highs. And we probably won't start to see the effects of this dynamic until late 2025. But it is coming, and it's coming in hot. All of these homes that should have been built and under normal circumstances would have been built will not exist come towards the end of 2025, because basically since, the middle of 2022, all the way up until then, we saw record high population growth with record low housing starts, and then that is going to materialize or start to materialize in the back end of 2025, I believe, but definitely by the middle of 2026. And this right here is basic math. There's no way to argue that this doesn't exist. We will indefinitely be in a large supply shortage in the next 2 to 3 years. So regardless of what happens to housing over the next year and a half, this dynamic is coming in the next 2 to 3 years, which will likely set a floor under prices and spark some type of price reversal where we continue a trend upwards. And number 5, this is a big one. No real way to mathematically gauge this, but I am under the fundamental belief that no matter what happens, the general population always seems to lose. Things just get worse for the general population, and I guess we do have math to back this up. We have a long history of statistics and math and charts to back up what I'm saying here. The cost of living will rise higher than wages, asset values will continue to increase, and maybe there's a very small blip in time where things get better for the general population for a very short period of time before eventually things take off and continue the trend towards getting worse again. And in this particular scenario, it would actually be worse for the general population if home prices were to increase. And the reason why I believe this fundamental belief is because it's just how our monetary system works. The cost of everything has to keep going up, otherwise it all implodes, because we are a debt-based monetary system. A guy much smarter than me once said 99% of sovereigns will default on their debt, and they will default one of 2 ways. The first way being a total and unequivocal financial collapse. The second way is via inflation, which, by the way, the only reason why that 99% is not 100% is because we still have fiat currencies like British pound, CAD, USD, and all the currencies we use today. But if they were to collapse right now, that number would be 100%. So which way do you think our government will choose? Do you think they're going to go with financial collapse, or do you think they're going to go with inflation? Which way are they going to choose to default? Obviously, they're not going to choose financial collapse, because that just basically means we give up. What they're likely going to do is a financial collapse may happen, but then they're going to print a bunch of money, and that then would lead to inflation. So it's pretty much always going to lead to inflation. And if you go back and you look in history to, all of the fiat currencies that eventually eroded away, they all collapsed, or all of those societies went down the drain due to inflation, right? It was like the Roman Empire started, taking all the silver out of their coins and replacing it with zinc or something like that. The Germans had hyperinflation, etc., etc. I'm not a historian, but you know where I'm going with this. Now, I know the purpose of this video was to maybe make you feel better about how everything is happening right now, and maybe you actually feel worse. However, this is the truth, and I actually think this is a positive for where we currently are right now, because our currency will eventually collapse. It's a fiat currency based on debt. Eventually, we won't be able to roll that debt over, and everything will implode, and we'll have to make a new system. However, that could happen next week, or it could happen 100 years from now. And the fact that we still have tools to prop everything up means that we are likely going to be in this for a while before anything like that happens. And all I know currently is I wouldn't count on real estate values collapsing, because if they were to do that and the government has tools to stop that from happening, you can bet that they are going to use those tools. They're going to swiftly come in, pick up the pieces, drop interest rates, print money, get rid of the stress test, whatever they need to do to get everything back on track. And in 5 years from now, we're going to be sitting here going, man, I wish I bought that 3-bedroom rancher in Cloverdale for $1.3 million, because today it's $1.7 million, which sounds completely ridiculous. But if you look at other places across the globe, prices like this do exist. And I think it's very possible for our market going forward in the future that we do see much higher prices. Thanks for watching. Don't forget to join the Equity Club for insider deals, early access to pre-sale and resale deals, link below in the description, and subscribe to the channel for more content like this. I'm that Agent Kelly. I'm making moves to move you. Peace.